everything we've learned about money in its traditional sense and success in the traditional sense is not what really matters. Because a lot of people are going to school to get good grades, to get a degree, to get a job, to make a high-paying career, which makes sense. That's what we're all taught, right? We're taught to go to school to get good grades, to get a good job. But that's not what wealthy people want to do. Wealthy people don't want to go and climb the corporate ladder. They want to do something completely different. They want to own the corporate ladder. And now when you hear that for the first time, it's like, I don't have $1 million to go out and do that. But you don't need millions of dollars to do this. What you need is a change in mindset. Because the way that our economic system works, we live in something called a capitalist system. And a capitalist system means there's two ways that you can get paid. You can get paid from your labor, which is what we're all taught to do. Go to school, get good grades, get a good job, become a doctor, become an attorney, become an engineer, become an accountant, become whatever, make a big salary. That is your labor. But no wealthy person talks about how much money they're making from their labor. They talk about how much money they're making from their assets, from what they own, from their capital. That's the second way you can get paid, from your capital. And interestingly, in a capitalist system, the way people build the most wealth is from their capital. Yet, most of us have never learned a thing about how to make money from our capital. We're taught to make money from our labor, which is kind of ironic. Because if you live in a capitalist system, people want to become financially successful. Yet our school system will never teach you how to become financially successful. They'll teach you how to become a good worker. They'll teach you how to become a good spender. But consumers and workers are not the wealth builders in this country. And that's where, unfortunately, that education can only come from your financial education, which is going to have to come from outside of your school, which means you're going to have to go out of your way now to learn about money, to learn about investing, to learn about building wealth, to learn about entrepreneurship potentially, and to see how you can actually use your income. There's nothing wrong with working a job. There's nothing wrong with that at all. But there is something wrong with you working a job and spending all the money that you make and then wondering why you're not successful. You have to do something with that income to convert your income into assets that will continue paying you even when you stop working.
Absolutely.
And that's where the real success is built. And unfortunately, we're never taught that.
Never. Not in school, at least.
Yeah, at least not in school. Now, thankfully, YouTube has made this type of education a little bit more accessible.
YouTube University, that's how you built your whole following.
And you know, what's crazy about that is, for me, I started it on accident. I never went out to become a content creator. So the part that I didn't tell in my stories was my parents were very strict, and they really were not a fan of me doing anything in the entrepreneurial space or kind of financial space, early on at least. So when I was hosting these teen parties or college parties, I didn't tell my parents.
Wow.
Because if they found out, they'd be very angry that I'm not spending my time studying, that I'm doing these kind of not important things. When I told my dad I wanted to invest in real estate, my dad's response was, "You're stupid, go study, become a doctor, worry about these things when you're done with being a doctor." And it's not that they were bad, or it was just that they didn't understand. Like, they didn't grow up with that financial education. And so, I can't fault them or blame them. I love them. And now they're very happy with kind of everything that I've done.
Nice.
But it's that kind of general consensus that you just have to go to school and get good grades and everything will be fine. Because I thought that if you had good grades, you're going to make more money. It's like a linear correlation. The better your grades are, the wealthier you'll become. But that's not true. It's your financial education that will determine how wealthy you will become.
Wow.
And so if you know what to do with your money, now you can become wealthy. And if you can earn more money, now you can become wealthier. It's all about what you do with the money that you generate.
Absolutely.
And that's where the key is.
Yeah, we'll definitely dive into that. I want to touch up on your father. You said he was closed off from revealing financial information to the family, right? Do you think more parents should be open with their kids about that?
I mean, I think parents in general should talk to their kids about money. And I think money shouldn't be a taboo topic. I think the reason why many people are scared to talk about money, or they try to hide the topic of money or try to make it seem like a bad thing, is because many people are insecure about the topic of money. And when you're insecure about something, you generally don't want to talk about it, or you want to put up a smoke screen or whatever excuse you want to call it. But at the end of the day, you and I spend money every single day. We use money every single day. There's no person, especially in a first world country, that isn't using money
Yeah.
every single day. I mean, you got to pay your bills, you got to buy food, you got to buy that roof over your head, you got to pay things, you got to generate an income. Like
Yep.
money is a part of every single thing that we do. And so when you say that money is bad or it's evil, you're putting an emotion on something that has no emotion, right? Money is not a bad thing or a good thing. It's just a thing. Money amplifies who you are. It's fuel, and it's a piece of paper. But you need this paper in order to be able to drive a nicer car, to put your kids in college, to be able to fund your house. And so now, instead of trying to make it seem like a bad thing, what I'm saying is be open about it, to talk about it. That way you can change the way you think about it, because if you can change the way you think about money, you're going to change what you do with money.
Right.
And I'm not saying you need to go out and become some money hungry, money greedy, this money like obsessed thing. But you have to understand that money plays a part in all of our lives.
Yeah.
It's not the only part of our lives. You got to be physically healthy, mentally healthy, spiritually healthy. But you also want to be financially healthy too, because if you don't have money, well, guess what? Well, now you're going to be stressing about how you pay your bills. That can mess up your physical health because now you can't afford good food. It's going to mess up your mental health because money problems are one of the leading causes of suicide, divorce, depression. It can mess up your spiritual health because you can lose your sense of purpose if you feel like you're not financially healthy. So, yeah, I mean, maybe money by itself can't make you happy, but being broke is not going to make you happy either.
Right.
And so what I advocate for is not to become money hungry or to become this money obsessed person, but rather understand, look, money is important.
Yeah.
Understand it, learn it, because you're going to use it every single day. And it's a lot easier if you don't got to stress about money.
Absolutely. And your method with how you use your money and invest it is interesting. You save 10% of your money, right?
Yeah. So a basic rule that I recommend, or that I talk about, not that I recommend, is 75, 15, 10. Which says for every dollar that you earn from here on out, 75 cents is the maximum that you spend, 15 cents is the minimum that you invest, 10 cents is the minimum that you save. So what that means now is you're earning money, but you're always working to pay yourself first, meaning you're always working to save a little bit of money and invest some money before you go out and spend your money. And the more aggressive you are with your investments, the wealthier you'll become.
Yeah.
Because I think there's this old kind of flaw that you can save your way to wealth, which maybe worked for your parents or grandparents, but it doesn't work in today's economy or today's generation. You can't just save your way to wealth. You're going to save your way to broke if you do that. And now this is where people get confused and they say, oh, I should not save any money. No, you got to save money, but you got to understand why you're saving money. If you're saving your money to get rich, you're saving your money the wrong way. But if you're saving your money to protect you against an emergency, or you're saving your money to purchase something like a house or a car or something that you want, you're saving your money the right way. So you got to save your money strategically. But if you want to become wealthy, it's not through your savings, it's through your investments.
Right.
That's where your wealth is going to be built.
And that's a big shift in mindset, especially for you, right? Because Asians are big savers.
Yeah.
Right. I grew up in a household where my mom saved probably 80 to 90% of her income.
100%.
And that's what she taught me to do too.
Yeah.
But like you said, with inflation and almost every currency in existence has failed. So you got to keep that in mind as well.
So my family's from India, and in India they operate on rupees, which is the currency over there. And what's funny is, I have rupees in my house, and we would go to India, transact with rupees, come home, and we'd keep some there. And then India is unique, where on more than one occasion in recent years, they have demonetized certain currencies. Meaning, let's say you have a 1,000 rupee note. The government comes out and says that 1,000 rupee note is now worthless.
Wow.
And so now I'm sitting here with these notes sitting in my bedroom. I have quote unquote money, but now it's worthless because the government says it's worthless.
Yeah.
And it's funny, in India, particularly, I think that's one of the reasons why it's very common culture for people to, when they have a lot of money, currency, they'll want to convert it to gold as a way to save money. It's just a very common thing in India. And the reason behind that, I don't think a lot of people actually follow the financial education behind it. It's more of just a culture that, when you have money, get gold. When someone gets married, give gold. When somebody has a baby, give gold. But the real value behind that is when the value of a currency drops, the price of gold relative to the currency generally goes up. Not because the gold becomes more valuable, but because the currency loses value.
Right.
So now when you talk about Asians saving money, it was the same in my house. It was I have a kind of funny joke, or not a joke, but a thing that I say. It's Indian people make $1 to spend 20 cents. American people make $1 to spend $2 with credit cards and line of credit.
Yeah.
But the reason behind that is people, especially in Asian cultures, kind of have this cultural tendency to earn money and not want to spend it. But when you just save, you can save a big bank account, but that bank account's going to be losing value each and every day, especially if inflation is higher than what your bank account is paying. Now, fortunately today, you can get a high interest savings account that might be able to beat the reported inflation numbers.
Right.
Reported inflation. But if you really want to build wealth, you got to be putting your money into certain assets that will be growing. Because when you compare the growth of stocks or housing prices to savings accounts, there's a big difference. Now there's risk. Stocks can lose value.
Right.
Home prices can lose value. Yeah, rental property tenants can destroy your property. There's risk. But with more risk comes higher potential return. And I think the mistake that a lot of people make, especially when it comes to investing, is they have a very short time frame that they look at things. Either I invest my money for 6 months, I lost money, I sold, it's bad. Or they look at a few years worth of historical data and they assume that things will continue in this direction for a short period of time.
Yeah.
But investing is not a short-term game if you want to be a successful investor. This is a long-term game, a multi-decade game. And that's where what we've seen is that asset prices generally go up. We've seen recessions. We saw the 2020 recession. It's called a recession. We saw the 2008 recession. We saw the 2001 recession. We've seen a recession pretty much every decade for the last century. Yet, over the last century, stock prices have risen, real estate prices have risen, business valuations have risen, and dollar valuation, the value of the dollar has dropped. So what would you rather own? Now, I have cash, I have savings, but I would rather keep my money in investments, that the money that I want to make me wealthy, and use my cash to protect me as opposed to use my cash to make me wealthy.
Right. So when it comes to investing in assets, choosing them, there's so many different types. Is there any that you sort of lean to?
So I invest my money in 5 places. I don't recommend what I do to anybody else. I can't recommend what I do. I'm not a financial advisor. I'm just a random guy on YouTube. But I invest my money 5 places. I invest my money into my own business, Reefs Media. I invest my money into real estate, rental properties. I invest my money into stocks. And then I have what I call more speculative, which is invest my money into cryptos and invest my money into physical gold. So my speculative, which, I also have startups in there. So crypto and startups are like the speculative part of my portfolio. It's a very small piece of my portfolio. I know they can go to zero tomorrow, but it's a little bit on the fun side, and I believe in the value of it. And so, it's a small piece. Gold is about 2% of my portfolio.
Okay.
Physical gold, not paper gold, which, again, for me, it's a way to save hard money as opposed to saving just currency. And then real estate and stocks, most of this is for cash flow purposes. I like investing for cash flow.
Okay.
Because that means I don't have to sell my investment to get paid. I can buy a property tomorrow and it'll be able to generate cash flow. Now, of course, in different economies, it's harder to find certain cash flowing assets. But again, no market stays in the same place forever. Like I talk about real estate investing today, people are going to say, oh, Jaspreet, I can't find any properties that are producing strong cash flows. Sure, and be patient. Warren Buffett says it the best, that the stock market is a device that transfers money from the impatient to the patient. The reason why so many people lose money when it comes to investing is because they're impatient. We want to start putting our money to work today. Make that investment today. Oh, I see the stock going up or investment going up. I need to buy it today. But the money is built in patience. We're either on the buy side or the sell side. You don't chase, you wait for a good opportunity. And when you sell, you're selling now because you see people getting greedy.
Yeah, that's why you rarely see day traders making a lot of money, because they're just trading same day. They can't really make insane gains.
It's a way to earn money, and you can make money very quickly, but you can lose that money just as fast. The real wealth is built through long-term investing, long-term wealth ownership. It's not through day trading. It's not through flipping. It's those are ways to earn money. Sure, and they take a lot of work, but that's not investing. And that's I know nothing about flipping or trading. I tried it for a little while when I was in college, thinking that, oh, I'm an investing genius, I'm gonna get in this.
Yeah.
But
We all tried it, I think.
it wasn't for me. So
Yeah.
I don't talk about. I don't know anything about it, so I can't recommend it.
Now, you mentioned credit cards earlier. What's your opinion on debt? I know there's a huge debt with credit cards right now. Are you a user of them?
I love credit cards.
Okay.
I try to use a credit card for any spending purchase that I have to make. The reason why is because I never carry a balance. I pay off my credit card balance in full every month, every single month. And so what does that give me? It gives me cash back, it gives me perks, and it gives me rewards. Now, if you have credit card debt, you're using credit cards the wrong way.
Right.
If you ever carry a credit card balance, you're using credit cards the wrong way. And you should cut up your credit cards, go listen to Dave Ramsey, and get out of credit card debt. If you are paying interest on your credit cards, you are the person making everybody else rich. You're making the credit card companies rich, and you're paying for everybody else's perks. And for me, I like credit cards because, number one, I get cash back. And then number two, I get a ton of perks and rewards. Just right before a couple of our team members are here, we were just talking about access to airport lounges. My credit card gives me access to airport lounges. I travel a lot.
Right.
I've spent in the last 2.5 months less than 2 weeks at home.
Damn.
So I've been on a plane quite a bit, and now I'm traveling through airports. I'm staying in hotels. I'm driving rental cars, and guess what? My credit card will pay for hotel upgrades, rental car upgrades. It'll pay for airport lounge access. So it gives me a lot of benefit. And the benefit when it comes to cash back is if I have to go out, I got to go to Walmart. I got to spend $100. Well, there's 3 ways that I can buy this thing. I can pay for it with cash. I can pay for it with a debit card, or I can pay for it with a credit card. If I pay for it with cash, I give Walmart $100, I get the product. If I pay for it with my debit card, I swipe my card, I get the product, and Walmart will pull $100 out of my bank account.
Yeah.
If I pay for it with my credit card, I get the product, the credit card company is going to pay Walmart, and the credit card company is going to pull $100 out of my bank account, but then the credit card company is also going to give me $1.50 back just because I use a credit card. So for me, the credit card is just a medium of exchange.
Right.
And that medium of exchange gives me certain perks and benefits that I like. And I know I'm never going to spend money that I wouldn't if I wasn't using a credit card. I'm not going to go, I love Dave Ramsey. I think he has helped so many people and he has great advice. But there are certain things that just don't apply to me that I feel like I don't necessarily need. I used to avoid credit cards because I read Dave Ramsey's book. This is when I was in college. And I stayed very far away from credit cards because of that. Because I was scared. I was like scared of credit card debt.
Yeah.
That if I had a credit card, I'm going to end up with $10,000 in credit card debt and I'm going to be drowning in this debt. But at the same time, I knew I was very frugal. Like I was not spending money as it is. And I'd keep cash in my wallet. And what ended up happening was on 2 occasions in a short period of time, the cash was stolen from my wallet. One time in a gym, locker room, one time it was somewhere else. And one time I made a purchase with a debit card. This is, again, a number of years ago, where I purchased something online, but I never got the product.
Yeah.
I tried to file a dispute with my debit card company, and they said, we can't do anything because the money's already gone. If this was a credit card, we could have filed you a dispute and gotten your money back, but because it was a debit card, we can't do anything.
Yeah.
Once that happened, that was a turning point where I was like, all right, you know what? I'm going to get a credit card and see what happens. And then all of a sudden, my spending habits did not change, but I started getting some cash back. And that was like, whoa, you mean I can get a little bit of money back just for making a purchase with my credit card instead of my debit card?
Yeah.
Okay, that makes sense to me. But the key is, again, you can't spend more money because you got a credit card trying to hit those perks. You got to just make your regular purchases with a credit card and never go over.
Yeah.
And always make your payments on time.
I'll never go back to debit, man. I love my Amexes.
Yeah.
If someone wants to scam me, I'm like, please do it.
Exactly.
I'm getting this money back.
Exactly.
Either way.
It's so much easier.
Yeah.
It makes it so much easier.
Dude, what are you working on this year for 2024? Any exciting things coming up?
Yeah, so we're doing a lot of cool things at Briefs Media, my company. We have a few different products. One, we have Market Briefs. And Market Briefs is a free financial newsletter. And the reason why I'm so excited about this is because I'll give you my honest truth and thoughts about YouTube. YouTube is amazing. I love YouTube. But the problem, especially in the financial space on YouTube, is if your title of the video isn't very attractive, people are not going to click on it.
Right.
And so in the financial space, that means, let's say we're talking about what's going on in the stock market. If you say, here's what happened in the stock market, and another video that says, is the stock market going to crash? This one that says, is the stock market going to crash, is going to get more clicks. And unfortunately, if you don't have an attractive title, your video is going to end up in the YouTube graveyard. And I hate these types of titles. But I had a heart-to-heart with my team where some of the guys on the minority mindset side said, look, Jaspreet, you have good content. If you don't play the game, people are not going to see the content. At least you have real value in your videos. So I said, okay, but that for me was still like, I don't like the sensationalism side of media.
Yeah.
And so that was when I really started to work on Market Briefs, which was this financial newsletter where my team is breaking down what's happening, things in the economy, the stock market, the housing market, crypto, and the global economy to a fun, witty, and easy to read email. You can read it in less than 5 minutes every morning. But here's the nice part. Because it's a newsletter, we don't need to have any of that sensationalism. When you open the email, everything is there. It's unbiased, and we break down what's going on into a fun newsletter. So that's been a very fun project that we've been working on. We have a lot of cool things planned in 2024 to take Market Briefs to the next level. But in addition to that, we've kind of built out a couple other cool projects through the Briefs Media brand. We built out by demand, a Market Briefs Pro newsletter. So if you read Market Briefs and you're like, I wish I could keep up with the financial trends and more deeper analytics.
Yeah.
We now have a pro newsletter as a paid newsletter, and we also have a paid educational platform called Briefs Academy. So we have that going on. We're launching an app in 2024. So a lot of cool things in Briefs Media in Detroit. So when you come by, I'll show you.
We'll come by. We should have an event there together, man.
Oh, I'd love it, man.
I host networking events out here. We get 1,000 people. I'd love to bring that to Detroit.
That would be awesome. There's a lot of cool things happening, but yeah, just doing a lot of cool things on the Briefs Media side, and just honestly, just trying to help spread the financial news and education, because these were things that I never understood, and I wish somebody would have told me when I was growing up. So it's just really just trying to provide that education to people in a way that anybody can understand, because I was always interested in the financial side. But when I was younger, you turn on like CNBC or Yahoo Finance, there's a lot of terms that you don't know what they mean. Like if it says the 10-year treasury fell by 40 basis points, what does that mean?
Yeah.
Maybe you know what that means, but how does that affect you? And so my whole thing was, let's break this down in plain English so anybody can understand what this means. Like we follow something in our team called the 16-year-old rule. If a 16-year-old can't understand it, it's too complicated. So we try to just break things down in simple English so everybody can understand the money side of things, because we all use money every single day. So you might as well understand it.
Yeah, I'm glad to see you getting it out there and making sure that, it's not bad to talk about it, because growing up, especially in Asian households, man, they don't talk about it at all.
Yeah, you got that right. And it's such a common thing.
Yeah.
And it's not even Asian households, man. There's different cultural differences.
Yeah.
Like Asian households have a lot of similarities, but across the world, there is this common taboo or misconception or just smokescreen around money. And at the end of the day, it costs money to eat and it costs money to feed other people. You want to take care of other people? Great. The more money you have, the more people you can feed. You want to take better care of your family? Great. The more money you have, the better you can take care of your family financially. Now, this is where everybody says, yeah, but you need to love people. You got to, nobody said you shouldn't love. Having money doesn't affect your ability to love, provide support and care and to be there. It's in addition to that. And that's where, is understand money is important.
Absolutely. Where can people find out more about you and get in touch with your team?
Well, I post videos every day on my Minority Mindset YouTube channel. You can check it out there. If you want to learn more about Briefs Media, you can go to briefs.co/market to join Market Briefs, or briefs.co to just go check out what we got going on Briefs Media. Thank you for having me, man.
Absolutely. Thanks for coming on, man. Thanks for watching, guys. As always, see you tomorrow.
I don't go out for dinner. I don't have a nice car. I take the train to work. I don't buy expensive things. I'm struggling. I can't ever escape the system. What do they do?
Well, you got to figure out what's more important to you right now. Because if you only have 50 to 100 pounds a month and you want to decide if you want to treat yourself or invest in yourself,